kind of a preview in here, and then they do a presentation at the council meeting. But before we go further, maybe we should get Adam to talk with us about our audit.
Absolutely, sir. Appreciate it. Certainly appreciate the opportunity to be with you guys. Thank you. With you guys here today. Just a little corner of your table here. And certainly appreciate the opportunity to continue to work with the city on doing the audit. We have completed our audit work and issued our audit opinion, dated at the end of last week, and so we've all received a copy of that as well as a couple of other documents. And so let's see. There we go. And so I put together a very high-level presentation here. I know that management keeps you guys up to date with the financial results on a monthly basis, and so I'm not going to go into a whole lot of detail, but I will go through just a few items in that financial report. And you guys feel free to stop me at any point if you have any questions. I get kind of excited when I talk about accounting and I start waving my hands around and things like that. So if I start doing that, just stop me and tell me that you want to talk about something else. As I mentioned, you've got, we'll go through the comprehensive annual financial report, which is the bound document that the city produces. We'll go through the audit results and then the required auditor communications, those communications that we're required to make to you as the governing body of the city. And then there's one new standard that has to be implemented next year, and so I'll touch on that at a very high level as well. And so in that bound financial report, it's really broken up into kind of three main sections. The introductory section, which contains essentially information about the city, principal officials, and management. It also contains the 2012 GFOA award, which is the award that the city submits the CAFR for every year. They will do that again this year, and I couldn't tell you how many years in a row the city has received that award, but it's been as long as I've been involved, which has been 5 or 6 years. So it's a lot of work on management's part to do all the work to get that certificate.
Quick question.
Yes, sir.
I mean, can you elaborate a little bit more on that award? I mean, I don't think some of the citizens understand the amount of work that goes into audit and keep control of our monies. Can you elaborate a bit on that?
Absolutely, absolutely. So the GFOA award itself is primarily related to the presentation of the city's financial statements, and obviously in accordance with generally accepted accounting principles, but also there's additional information that the city goes above and beyond what is required by those just accounting standards. The entire statistical section in this CAFR is not required by the accounting standards, but it is required for the submission of the award, and it contains all sorts of trend analysis information about populations, taxpayers, debt analysis, things like that. So the city has to go through and gather all that data. And again, it's not required. We could give an unqualified or unmodified opinion on the financials without that data. The city goes through and takes time to put all that together as well. And then also, as I mentioned, kind of the front section, the entire introductory section, that's all not required by the accounting standards, but they are required for the award submission. And again, it takes a lot of time for the city to go through, put all of that together, take the time to design the coverage related to financial statements. So the GFOA is, they almost kind of take for granted the fact that your accounting is going to be correct because it's attached to an audit. But then there's just the presentation of all the supplementary analysis and data that the city's management has to go through and pull together. It's a lot of work. It's a lot of work.
Appreciate that.
Absolutely. Kind of the next section is the financial section, which includes the independent auditor's report, which is on page 1. That's the page that's on our letterhead. The MD&A, Management's Discussion and Analysis, which begins on page 3, the financial statements and note disclosures. I'll go ahead and point out to you so you don't have to wait until we get to the end. We have issued an unmodified opinion on the financial statements, which is, that language is a little bit different than we've used in the past. We used to use the term unqualified. Some of the standards have changed, and so that terminology has changed to unmodified now, but it's still the highest level of assurance that we can give on a set of financial statements. It's a clean audit opinion. And then I would also point out the MD&A on page 3. I'm not going to go through it, but that is kind of management's plain English discussion of the financial positions of the city and the activity that's gone on during the year. They go through and do some budgetary comparison, highlight some important factors and some important transactions during the year, and discuss some kind of ongoing trends going forward related to the future budget as well. And it does, we don't audit that information, but we do read through it, make sure that it's consistent with the financial statements themselves and our understanding of what's going on in the financial statements. So I certainly encourage you to read through that. Again, Michigan puts a lot of time into putting that together. And then as I kind of already touched on, the statistical section is the information in the back. There's 10 years of information related to different revenue sources, different expenses, and then outside of financial information, it has information related to population, taxpayers, things like that. So it's a lot of good trend analysis information back there. Going into the statement into the financial statements themselves, since I've already touched on the opinion and the MD&A, which is starts on page 15. We have a statement of net position. You may notice as I go through, we've got a little bit different terminology than we've used in the past. Again, there's an accounting standard that changed this year. It didn't change any actual numbers, but terminology changed. We used to use the term net assets, which was kind of your equity, if you think about it. The term net assets doesn't exist anymore. We use the term net position. So, but again, for this year, outside of just a change in terminology, that didn't impact any numbers. So you can see here, if you'll recall, there's kind of two separate sets of financial statements included in your bound document. The city presents one, which we call the government-wide financial statements, and that is essentially a picture of the city as a whole, presented almost as if the city were a business. It is on a full accrual basis. It includes long-term and short-term assets and liabilities. So it has all the city's debt is included there, all the capital assets, things like that are all included there. So you can see governmental activities for the end of September 30th, 2013, total assets of about $167 million. Total liabilities of about $50 million for that ending net position or equity of about $117 million compared to ending net position for 2012 of about $109 million. So you can see a favorable increase there in that net position of about $7.8 million. I'm going to flip forward in my notes because I've got some percentages there for you. So that's about 7% increase in that net position. That net position is important because it can really be used as a indicator of the city's kind of long-term health. So as net position kind of goes up or goes down over time, not just in a one-year time frame, but if you start to look at the trends, that net position can give you a good indication of the city's long-term financial health. Statement of activities on page 16 is essentially the income statement that goes along with the balance sheet that we just looked at. Again, this is at the government-wide level, and you can see total revenues about $59 million. $59.3 million compared to $53.6 last year. Total expenses of about $52 million compared to $49 last year. To give us that excess of revenues over expenditures of about $7 million. We have a few transfers in between governmental activities and the enterprise funds to give us that final change of about $7.8 million that we talked about before. And for comparative purposes, you can see that that change last year was about $5.1 million. So that increase in net position did go up about 50% from last year. So moving forward to page 17, you have essentially the balance sheet related to the governmental funds. This is kind of the level that you guys look at when you look at the budget. Where we really look at the current financial resources. So this does not include long-term assets, long-term liabilities. As I mentioned, this is kind of the budgetary level that you guys generally look at. So you can see general fund assets at the end of 2013 of about $13.5 million. General fund liabilities of about $3.6 million to give us our ending fund balances of about $9.8 million in the general fund. Which is up about 6% from that $9.3 million last year. The other governmental funds includes all the other special revenue funds, grant funds, things like that. Almost everything else with the exception of some of the internal service funds and the water sewer fund. So you can see about $27 million total assets at the end of the year, about $9.4 million of total liabilities for that ending fund balance of about $17.5 million, which is down just slightly from last year's $19.9 million. Page 19 includes the income statement that goes with that balance sheet that we just looked at. Again, kind of fund level. These are the expenditures that relate to the budgets that you guys look at regularly. So again, you can see 2013 total revenues of about $31 million in the general fund, total expenditures of about $32.6 million in the general fund, and some other financing sources that come in and are treated. They're not revenues, but they are a positive impact on your fund balance. So we get an ending fund balance of about increase in that fund balance of about $579,000 for the year. You can see that compares to 2012, which had about a $1.5 million increase. So that increases down about $1 million from last year's. But as we know, the governmental financial statements are kind of a year-to-year basis. It's the current financial resources, so that we do expect to see some swings in that from year to year. Flipping forward to your water sewer fund, which starts on page 21, and the other enterprise funds as well. Again, that water sewer fund is on a full accrual basis, so it does include capital assets as well as long-term debt. So you can see the water wastewater fund itself, about $53 million in total assets, about $8.6 million in total liabilities, to give us that net position that we talked about of about $44 million. Just almost very comparable to the $44 million that was sitting there last year as well. You can see the other enterprise funds, which include golf course, softball world, all of that activity that you guys have going on. You can see total assets of about $34.8 million for 2013. Total liabilities of about $8 million. To give us, sorry, I was reading the 2012, $34.8 million, about $7.7 million for liabilities in 2013 to give you a $27 million net position, which is up just slightly from 2012. Then the statement of changes in net position related to those water, wastewater, and other enterprise fund. You can see a total change in net position of about $347,000. So there's that increase that we talked about. Revenues up just slightly and expenditures up just slightly as well. And then in the other enterprise funds, kind of similar, you can see that total change of $353,000 increase in net position is kind of an impact of both the revenues and the expenses increasing some for the year. So the financial statements, which I won't go through in, the footnotes to the financial statements, which I won't go through in detail, but they do contain summaries of the city's significant accounting policies. They contain a lot of information about the amounts that are reported in the financial statements on the balance sheets and in the income statements that are there. So I do encourage you to read through them, as they give you a lot more information, a lot more detail on how some of these transactions are accounted for. As we talked about, this fiscal section there starts on page 91, and just some of the items that are included there: financial trends, revenue capacity, debt capacity, demographic and economic information, and operating information. This is a lot of that information that I mentioned is not required by the accounting standards, but the city has taken it as their responsibility to put that together for you guys and submit it for the GFOA award. So as I told you, we did issue our unqualified or unmodified opinion on the financial statements, or clean opinion on the financial statements. We've also issued 2 letters to you guys. One of them is what we call we used to call the management letter. It's not really the current language that we use, but it's there's a 1-page letter on our letterhead that you guys have in front of you that the gist of it says we look at internal control over financial reporting as a part of our audit. We don't issue an opinion on internal control, but we do have to get an understanding of its sufficiency for us to perform our audit procedure. And if we did have any findings related to internal control, we would report them to you there. We do state in that letter that we don't have any material weaknesses in internal control related to financial reporting that we'd like to report to you guys. Then the other letter that you have sitting in front of you is what's called the required governance letter. Instead of reading to you from the letter, we put some of the items on the slide here, so I'll just kind of go through these items, and you guys can feel free to stop me. As you know, the preparation of the financial statements is the responsibility of management. Management puts together the numbers, we audit the numbers. And so management is responsible for compiling any estimates, coming up with policies that are going to go into that. We look at all the estimates, policies, things like that, make sure that we're comfortable with them, that they do give a true material representation of the financial position of the city. Certainly do believe that to be the case. We're not aware of any unusual or significant transactions that occurred during the year, nothing that didn't have any outstanding guidance for us to go out and look at and have to argue with the city on how they were going to present anything. As I mentioned, we do have some new terminology in here. That net position situation that I talked about, that's GASB statement number 63 that was implemented this year. As we said, no impact on any numbers, just a terminology change during the year. We did not incur any fraud or illegal acts or any evidence of anything like that. And we, as I mentioned before, we did not note any material weaknesses in internal control. We do provide what we call an in relation to opinion on all of that supplementary information that we talked about that the city provides. Although it's not audited, we do look at it and make sure that it's consistent with the financial statements and that the management isn't going and sneaking in after the fact saying, even though the financial statements say X, we really think Y. So we go through to make sure that that's not the case, and it's certainly not. Kind of already touched on management's judgments and estimates. As I said, management puts together quite a few estimates and judgments preparing these financial statements. The letter includes a couple of different items related to some of those estimates. Allowances for valuations on receivables, depreciation, and the estimate factors that go into the city's OPEB pension analysis also go into that. So we take a look at all that information, make sure we're comfortable with it. Certainly happy to say we've not encountered any disagreements with management during the course of the audit. No significant difficulties. Things went very well, especially this being first year with the new director of finance. So we certainly appreciate the opportunity to work with Janina, and feel like things went very smoothly with the transition. So we certainly do appreciate that. Management does sign a letter to us that tells us that essentially they have not misrepresented themselves. They've given us all the information that we need to be able to prepare that audit. And so if you guys would like a copy of that letter, we can certainly get it for you. But as I said, we have received that from management. We are independent from the city. Not noted any independence issues that would impair that independence. I'll also point out that we actually did not have to make any audit adjustments this year, which says a lot again for the city's preparation related to those numbers, because as we get in, we can really perform a better audit if we can actually get in and audit as opposed to having to make a bunch of adjustments ourselves and then audit our own work. Obviously, it's a lot better. We can be a little more objective. I'm pretty comfortable when I make an adjustment that it's right, but if I have to look at the city's work, then I obviously am going to scrutinize it a little heavier. So it's nice that we don't have to go in and make those adjustments. So again, a lot to be said for the preparation there. The letter does include a list of what we call past audit adjustments or uncorrected misstatements. What those are misstatements that if you wanted your financial statement to be correct to the penny, these adjustments would be made. There's a lot of reasons not to make them. Some of them, it would just be a timing issue. Management would essentially make the adjustment and then flip it back. A lot of them are very small amounts that wouldn't impact the use of the financial statements. And so management has represented, and we agree by looking at these that we don't feel like these past adjustments misrepresent the financial statements at all. As I mentioned, for 2014, there's going to be one new audit standard that's going to be issued, and it will impact numbers. So GASB 63 that we issued this year did not impact any numbers in the financial statements. GASB 65, which will be implemented next year, will impact numbers. It will actually impact previously presented numbers. So you can expect to see what we call a prior period adjustment next year if we determine that the impact is significant enough. There are quite a few items that we used to call assets and liabilities, and this is all accounting jargon, but the industry has broken out. Now on the balance sheet we have assets, deferred inflows, liabilities, deferred outflows, and net position. And so some of the items that we used to call assets and liabilities are going to be taken off. The best example I can give you is going to be debt issuance costs, so costs incurred related to the issuance of, say, bonds. Previously, those amounts were capitalized and then amortized expensed over the life of the bonds. With this new standard, those amounts are actually going to be expensed, even the amounts that are currently capitalized. So it's very possible that you will have that prior period adjustment next year to fix it. I know a lot of times people look at prior period adjustment as a dirty word, like you're fixing an error, but another reason for a prior period adjustment is the retroactive implementation of accounting, changing accounting principles, so you can't expect to see that from next year.
Can you put that in a subnote underneath there?
Yeah, absolutely, and that's exactly the way that it will read. That's exactly the way it will read. Outside of that, I know we've went through it very quickly, but I'm happy to answer any questions that you guys may have.
I guess I have more of a comment than a question. I think the average citizen has a hard time understanding basic accounting. I know I do at times. I have to reach out and ask the smart ones across the table here, like Loretta or our very capable finance director. But I mean, is there a process where the average citizen can go online and make a correlation between some of the accounting terms so they can really understand more about the budget process and what the terms mean? I know it's there, but I'm going to give you an opportunity to tell us.
I think that the best places to do that are actually found in that document. The transmittal letter kind of gives a broad overview of just kind of what's going on in the city and what the city has done to prepare the financial document. And then that MD&A that is in there, management's discussion and analysis, really kind of takes it from the accounting jargon and puts it into plain English to discuss improvements in financial condition, deterioration of financial condition, significant transactions during the year. Kind of gets away from the debits and credits into plain English. Here's what happened and here's what you need to be aware of. So that management discussion analysis, I think, is the best place to see that.
Any other questions?
I want to point out to y'all, attached to one of these letters is a very small type. It says City Euless analysis of control deficiency. We started giving this to y'all a couple of years ago, and I wanted to mention that while Adam's here. These are very, very minor, what they call control deficiencies, and most of them we have known about for years. There's no surprises here. All of it could be fixed with people, and it primarily has to do with the segregation of duties. And because we have a relatively small staff, sometimes that segregation is not maintained as clearly as it should be by the letter of the law. However, there are other controls in place to mitigate that. And so we discuss that with them every year, and we want to give this to you again. And I don't, Adam, you want to address those?
Well, just to put it in context, you guys may remember there are 3 different levels of what we call deficiencies in internal control. The highest, most significant issue would be a material weakness in internal control. And as we mentioned, we've given you guys a letter of report that said we do not note any material weaknesses. The kind of mid-level would be a significant deficiency in internal control. We are not allowed by our standards to give you a letter that says you don't have any significant deficiencies, but we are required to communicate any significant deficiencies to you if we are aware of them. We have not communicated any to you, so you can draw your own conclusion there. This is a list of just the very lowest level, which is deficiencies in internal control. Every organization is going to have deficiencies in internal control. Deficiencies, essentially the way you arrive at deficiencies are as you start to look at a process or an accounting process or transaction cycle. In a bubble, you look at each piece, and for example, if you, and I'm not reading off, we'll just take the first one off here. First item here is a review of disbursements of payroll deductions is not marked as performed on request for payment. So just when we look in a bubble at that step, there was no indication that a review of this part of the payroll cycle had been performed. However, we have over here in the second column what we call compensating controls, which means the city has other controls in place that address this singular deficiency to the point to where these deficiencies don't aggregate to those material weaknesses or significant deficiencies. So, like I said, every organization is going to have some deficiencies in internal control. We like to discuss and point them out to management. We actually aren't even required to do so, but we feel like it's kind of a value added. We can point these out to you guys, and you can take a look at them. And management feels like, for transparency purposes, that it's important for it to be communicated to you guys. But as I said, there's nothing here that gives us any control or any concern, because we do have these compensating controls that are out here listed as well.
Compared to last year, you'll notice that the list has grown. The bottom three are related to IT. And this is the first year y'all done this?
This is the second or third, but as with anything, as you get more involved and gain a better understanding, we can obviously do a better job telling you guys you may want to think about X, Y, and Z. So, you know, just for example, if you look at the very bottom one down here, it says the client's passwords are changed every 182 years and are 7 characters. Industry best practices are recommended that password change every 90 days and be, you know, at least 8 characters. So, you know, it's that type of thing. You know, there's certainly no need for you guys to immediately go, you know, be concerned that your passwords aren't changed. You know, at this time, this is just kind of the current industry standard. Based on what our IT guys are telling us. I'm not even an IT guy, so I'm not going to try to pretend like I can point you towards an excellent source of that information. I can certainly get it for you.
The one problem with changing the passwords constantly like that is, well, people start writing them down, and you no longer have any security, because you've got 9 different passwords, and you change this one 90 days, this one 120, and you end up writing them down, and somebody gets that and they've got everything.
Well, I want to lift those up to you. It's absolutely not a reflection of our IT department. They will tell us you need to change your password, you know, every day, but we resist it. So I just want to point those out. This is kind of an absolute full disclosure that if they said they're not required to give it to us, we don't. In the past, years ago, we didn't even provide it because it's just information.
But you can make it happen. You have a software out there where it will lock you out at the end of 90 days or whatever it is.
That's what the
It will tell you, put your new password in, or you're not playing today.
And there's other things.
It's 7 days notice. If you don't change it in 7 days, you're out of here.
There's key fob deals we use for wire transfer. There's other much more sophisticated levels of this. I never do wire transfers. Where Janina had the misfortune of needing to do a wire transfer in the last month or so, and I was the only one around with the kind of the co-signing ability, and in fact, that was a Motorola thing. It was a big payment, and we had to get it done or we started accruing interest. So she came to me, and I had the key fob locked in a secure place, but it took us 2 hours to figure out how to use it. The poor lady and wherever we called that had to help us thought she was helping the second grader walk me through it. So there are other levels of security.
Second grader actually would have been pretty safe.
I didn't point those out to you. I'm sure you understood. We could get Janina 2 or 3 additional people, and I think we could wipe out all of those upper 2 or 3. But it would cost us $3,000 or $4,000. Not even on Janina's watch, but before that, for years, we have compensated with that. Not to do that.
Well, thank you for sharing these with us.
Appreciate it.
They will be around, do the presentation at the council meeting, item number 5, I believe, is that right? On your agenda. Yeah. Item number 5 is the comprehensive annual financial report, and it is just acceptance, I'm approving it. That will be, Janina, tell us about how this gets online and the budget.
Okay,
When that will occur.
And right now in front of you, as Adam was walking you through, you had the actual hard document. Also on the disc in front of you is the digital version of this CAFR, Consolidated Annual Financial Report.